The Federal Reserve just made a decision that will cost you $7,400 this year, and they're hoping you won't notice. Something is breaking, not crashing, not collapsing, breaking quietly. Your groceries up 25%, your rent up 30%, your paycheck worth 18% less. March 2022 to July 2023, the Fed raised interest rates 11 times, 0 to 5.5%, the fastest monetary tightening in 40 years. They told you it would fix inflation. It didn't. And now, they're trapped. Here's the trap nobody explains clearly. Raise rates more? You break jobs, break banks, break the housing market. Lower them too early? Inflation roars back. Your dollars lose value faster. Can't go forward, can't go back. This is called a policy corner. And when central banks get cornered, history shows us what happens next. History shows us what happens next. Nothing good. But here's the part that should make you angry, because there's something happening right now, something that has a name, something most people have never heard of. Financial repression. It works like this. You put $10,000 in a savings account. You earn 2% interest. That's $200 a year. But inflation is running at 3.4%, so your purchasing power drops by $340. Net result? You're $140 poorer, even though your account balance went up. And here's the worst part. The people who benefit from financial repression are the people who owe the most money. The government has $36 trillion in debt. When inflation runs hot, that debt becomes cheaper to pay back. Your loss is their gain. Warning sign number 1. Consumer debt at record highs. Americans now owe $1.13 trillion on credit cards. Warning sign number 2. Commercial real estate is collapsing. Office buildings in major cities are worth 40% less than they were in 2019. Warning sign number 3. The banking system is fragile. March 2023, Silicon Valley Bank collapses, then Signature Bank, then First Republic. The Fed had to inject $300 billion in emergency lending just to stop the contagion. Warning sign number 4. Small businesses are dying. High interest rates mean small businesses can't afford to borrow, can't expand, can't hire, can't survive. The restaurant down the street that closed last month? The bookstore that's been there for 20 years suddenly shutting down? That's not a coincidence. That's monetary policy. During the Trump administration, the Federal Reserve kept interest rates historically low. The economy was growing, unemployment was falling, and then the world shut down. The Fed's response? Print money. Lots of it. The Fed's balance sheet exploded from $4 trillion to $9 trillion in less than 2 years. They created 40% of all US dollars in existence in 18 months. By 2021, inflation started creeping up. By 2022, it hit 9.1%, a 40-year high. The Trump era planted the seeds. The Biden era inherited the explosion. And the Fed is now trying to clean up the mess with tools that are breaking in their hands. So here's where we are right now. The Federal Reserve is trapped in what economists call a policy corner, and there's a name for what comes next. Stagflation. High inflation and high unemployment at the same time. The nightmare scenario. The last time this happened, it took Paul Volcker raising interest rates to 20% to break the back of inflation. 20%. Mortgage rates hit 18%. It triggered the worst recession since the Great Depression. But here's the thing. In 1980, the national debt was $900 billion. Today, it's $36 trillion. We literally cannot afford 20% interest rates. The government would default. So we're trapped, and the walls are closing in. Now let me bring this back to you, to your life. Because this isn't just about charts and interest rates and Federal Reserve policy. This is about why your paycheck doesn't stretch like it used to. Why your parents could buy a house at 25 and you're 30 and can't even afford a down payment. That's not your fault. That's not because you're not working hard enough. Not because you're bad with money. That's monetary policy. If you own assets, stocks, real estate, businesses, inflation can actually help you. But if you live paycheck to paycheck, if your wealth is your labor, not your investments, you're getting crushed, slowly, quietly, by design. This isn't a bug in the system. This is the system working exactly as intended. 3 things to watch in the next 6 to 12 months. Number 1, the Fed's next move. Number 2, employment data. Number 3, credit markets. Scenario 1, the soft landing. The Fed threads the needle perfectly. Probability, maybe 15%. Scenario 2, the recession. Probability, around 60%. Scenario 3, The unthinkable. Stagflation. Probability? Maybe 25%, but rising. Are you going to be one of the people who sees it coming? Or one of the people who wakes up one day wondering when everything quietly changed? The next 5 years will not look like the last 5 years. And the people who understand that, who see the cracks, who prepare, who adapt, those are the people who don't just survive the transition, they thrive through it. If this video gave you a perspective you haven't seen anywhere else, hit that like button. It actually matters. The algorithm decides in the first hour whether to show this to more people or bury it. And I want to know, are you feeling this yet? What's the first place you noticed the squeeze? Groceries, rent, or gas? Drop a comment. I read every single one, and we're building a real community of people who want to understand what's actually happening behind the headlines. Subscribe if you want the truth about the economy without the political spin or the financial industry BS. I break down complex economic issues every week so you can make informed decisions. I've put together a free resource guide in the description. 5 things you can do right now to protect yourself regardless of which economic scenario plays out. Bookmark it. Share it with someone who needs to see this. And if you think I'm wrong about any of this, if you think the Fed has it under control and everything's fine, I genuinely want to hear your case. Leave a comment. Let's debate it. Because maybe I'm missing something, or maybe you are. But either way, we need to be having these conversations. Because the people making these decisions, they're not going to explain it to you. That's our job. The most powerful economy on Earth is not crashing. It's breaking. Slowly. Structurally. Quietly. Skylines still shine. Markets still open. People still scroll. But once you see the cracks, you can't unsee them.